Hello, everybody. This is Bennett Tchaikovsky, and welcome. So today, at the request of one of my viewers and amazing longtime students, I'm going to start up this corporate governance overview, corporate governance series over here on my YouTube channel. And let's go ahead and do it. So here's my disclaimer and copyright notice, and I'm going to read this a little bit more carefully in this video series because it is a lot more, it is bearing, I'm writing this for a very specific reason. The information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting or tax advice whatsoever. Additionally, starting and running a corporation can involve significant tax consequences. Therefore, making sure that you consult a tax advisor prior to making the decision to incorporate. Note that in this series, I'll be going over a variety of matters as it relates to incorporation and how a corporation operates. You should use this video series to educate yourself on the topic rather than to take it as any kind of sort of legal advice. These are my opinions and do not act on them. Educate yourself and then go through and get your own attorney. And the best way to use this video series is to learn about how corporations work and then go out and seek legal counsel. And this presentation is copyright 2008 through 2024 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. What I would tell you is that, there's going to be some things in here that you're going to regret later that you didn't do at the very beginning. So let's go ahead and take a look. A little bit about my background as of July 28th. 2024. This is as of today. So if you're watching this 5 years from now, it's out of date. I am a California licensed CPA and an attorney. I have created my own corporations and have assisted various not-for-profit boards, private boards, as well as publicly traded companies with corporate governance. Included in my experience is assisting several companies uplist to the NASDAQ, which have enhanced corporate governance requirements. So in my professional career and my academic career, I've always been serving on publicly traded company boards. I've also served on not-for-profit boards, and I've gained a lot of experience, and that is really what I'm here to share with you today. So let's go to the next one now. I'm only going to be doing the overview and possibly the first two videos here today, but what I want to do is to do this, and I'll try to go through and do the other videos later. This spring of 2025, I'm going to be teaching a financial reporting course where in that course, I'm going to talk a lot about corporate governance because it is a huge part of corporate social responsibility. Well, let's just kind of go through and talk about what we're going to do here. So I'm going to give you an intro to corporations. We're going to go through the articles of the incorporation on the next video, bylaws, and then we're going to talk about buy-sell agreements or business buyout agreements. This number 3, if you are forming a corporation with friends, loved ones, whoever it may be, the most important thing you can absolutely do. And I'll get when we get to that. And it's really about when you form a corporation, you can issue yourself shares at par value, which is very, very low. The advantage, if you look at like Jeff Bezos, if you look at Mark Zuckerberg, the advantage they have is that they formed their corporations when it had no value, yet they basically they bought shares at par value, which is at a fraction of a penny. And that's why they have so much wealth today, because their corporations have just ballooned in value. And if you watch the movie The Social Network, had Zuckerberg and Eduardo Saverin, had they actually set up their corporation right, probably the movie would never have been made. But anyways, I digress. Then we're also going to look at later on some enhanced governance through the NASDAQ. We'll talk in depth about the audit committee charter, the compensation committee charter, the nominating corporate governance charter, code of ethics, whistleblower policy. And then lastly, not-for-profit considerations, term limits, and then the importance of all of us serving on not-for-profit boards. So I want to kind of say some like, so a lot of the stuff we're going to be looking at, I'm actually going to be pulling up the actual documents from various secretaries of state so we can look at them together and you can see the actual documents and how they function. So let's talk about when do you incorporate and why should you incorporate? I generally tell people that once you have employees, you need to incorporate. And it's really because, especially here in California, which is probably one of the most challenging places to do business in, the laws that have been enacted, you really need to be incorporated. Um, and it goes without saying, like once you have employees, you really want to make sure that you are either incorporated or have some sort of an organization separate from yourself. And this gets us to the point of, well, if we're not a corporation, what's going to happen is we're going to basically be default what you call the Schedule C or what you call a sole proprietor. And essentially, as a sole proprietor, this is irs.gov. And if I just go over here to forms and instructions, if I just go over here, Schedule C. So what you're going to notice here is that if you are not incorporated and you're making money from a business, you need to go through and report that income. If you don't report the income you get from a business, you're just, again, I wouldn't do it, but, you should do it. And coming over here, I basically, when you're looking at this, this is basically like coming like right over here. You basically have gross receipts or sales, you have your income, you have your different expenses. And the crazy thing is in terms of the incorporation. And there's also going to be a self-employment tax on your profits. And what exactly does that mean? Well, if, say, if just using this really simplistically, say if my income was 100,000 and my expenses for my own business where I am a sole proprietor was say like 50 or let's say it's 60,000, my net income is going to basically be 40,000. And so essentially what this is really what happens is when you and I work at as like, so say if I get a paycheck, when we receive our paycheck, say we made last month, we made $4,000, right? Just picking out a thing. When we get that paycheck, that's the gross wages. We'll call this gross wages. When we get that paycheck from this is you're going to basically get Social Security tax, which is basically 6.2% up to of total wages. Don't know what the limitations are, but it's over 100,000, like maybe 130, 140,000. Then we also have Medicare, which is, oh, hold on. Okay. So the self-employment tax is 1.45% unlimited. So if we took this times 0.0145, it's gonna be about 58 bucks, right? So when you are running, and this is if we're an employee, and by the way, what happens is this is on the employee side, the employer has to match the Social Security tax. They also have to match the Medicare. There's other taxes involved too. In California, you have federal withholdings, you've got state withholdings, all that kind of stuff. But the reason why I'm showing this to you over here is that when you go through and you're looking at your net income on a Schedule C, this entire 40,000 is going to be basically subject to a self-employment tax of 15.3%. Okay, and where is that coming from? Well, they're replicating the Social Security tax employer, Social Security tax employee, the employer-employee contributions, the 0.01, the 2.9%. So you see where this is coming from, right? So this is 15.3% of a Schedule C. So if you're a sole proprietor, what a lot of people forget about is like, oh my God, if I'm making this, I'm making a lot of money. You got to actually be making tax contributions. And this doesn't cover income tax. This is just covering the self-employment taxes. Because even if you're working on your own, the government is going to basically make you go through and pay the equivalent amount as if you were an employee, right? So going back to this over here, if you are a corporation and you pay yourself a salary, right? So when we're a corporation, this is a Schedule C, right? Basically on this form right over here, right? Profit and loss. If we are in fact a corporation, let's go over here. So the form 1120, basically, let's go over here. Hold on. Yeah. So this one, if you are a corporation, essentially the corporation is an entity distinct from its owners. So what that corporation is going to do is instead of, they're going to basically pay you, or you're going to direct that corporation to pay yourself a wage. Now, this again, I'm mentioning this up out front because this is one of the big differences in terms of, oh, well, if I incorporate, I can hide all, don't have to pay that. No, you're going to have to pay the self-employment. You're going to have to pay yourself a wage, right? Or else you will get in trouble, right? If you have a corporation or you're incorporating, you're still going to have to pay yourself a wage. But when you talk to your CPA, or your tax planning person, they're going to be able to give you advice about, oh, how do I handle retirement contributions? What are some other things I can do from a tax planning part? So this is one of the major advantages of incorporation. And if you go and look up videos on YouTube, they're going to talk about this whole difference here. It's like, well, instead of paying, if I'm a Schedule C employee, right? Instead of doing that, you can have some tax planning advantages by putting money away into retirement. Okay, so the next thing over here is I'm going to share with you is that I had a friend of mine who had his own business. He was a sole proprietor. And by the way, as a corporation, it does not exempt you from charging sales taxes. If you are reselling anything, whether they be automotive parts, whether it be if you're a retailer, you have to pay sales tax, at least in California, right? Other states have different requirements. Every state, city is going to have its own little nuances. But the reason why I mention about incorporating is that if you're audited as a person about your sole proprietorship, right? So the IRS or the franchise tax board or whatever agency comes into your sole proprietorship and chooses to audit your sole proprietorship, what can happen is because there's going to be a commingling of your assets, of your personal assets with your business assets. They can then start going through and looking at your personal assets. There was a friend of mine who, great guy, he was a sole proprietor. I think it was may have been like the franchise tax board was looking at his sales taxes from some of the services he was providing that included parts. They came in and they did an audit. And then they started saying, oh, well, we want to look at your personal stuff. So then they went back in his personal things and they said, oh, you owe a use tax on something you bought over here. It was like a boat. And, he should have paid the use tax on the boat, but had his business been a corporation, all they can do is go after the corporation. They can't go after him personally unless there's an exceptional circumstance, fraud, something like that. But if you are a corporation, this is really going to separate yourself from the business. The corporation can go bankrupt, right? You can also have, if the employees, if they're going to turn around, and it's an entity separate from its owners. When a corporation is sued, you sue the corporation, you sue the officers of the corporation, you sue the directors of the corporation. So again, when you're running a business, why do incorporate? It's really to create that entity that's going to be separate from yourself and your business activities, right? Because they can't come after your personal assets. And when we're going through and I'm going to get back to that other question first, but let's talk really quickly about insurance. This is not when we go to Vegas and we see that, or go to a playing blackjack and we see that that dealer shows up with the ace and you're just screwed, right? I should just walk into casinos and say, here's my money, just take it. No, that's not that kind of insurance. The insurance we're going to look at is directors and officers, extremely important. If a corporation is sued, as I just mentioned, they sue the officers, they sue the directors, they're going to sue the corporation itself. That's why you want to have that policy. If you're a privately held company, this can generally be pretty reasonable, right? If you're publicly traded, different boat, but you have to have it. If you're a not-for-profit corporation, have to have D&O. Not-for-profits also get sued. Errors and omissions, right? So if I have a service, product that's defective, product liability insurance, professional, if I'm a CPA and I commit malpractice, I need to have insurance coverage for that. General liability, slip and fall on the premises of my work. Cyber liability, customer data gets exposed. Business interruption insurance, my business burns down, I get a payout, but I've lost weeks of business. How do I replace that coverage? Employment practices liability coverage. If I am sued by an employee, boom, there you go. Workers' compensation doesn't apply to everybody, but in California, you have to have workers' compensation. If somebody slips and falls, it is going to be covered by workman's comp. Very, very important. And by the way, I have heard of crazy insurance policies. One of them, you can buy, I think, ZZ Top, right? For all of those, you do not know who ZZ Top is. And if I do an image right here, these guys at one point in times had their beards insured, right? Because it's part of their image, right? They had an insurance policy on their beards, right? If it got caught on fire, right? I have heard of an NBA player buying a policy in the event his mom went to the general manager and complained about playing time. Is that true? I have no idea. But again, it's an insurance policy. I also heard that before Toys R Us went bankrupt, that it was either there were some vendors selling to Toys R Us, and this is a very long time ago. They bought insurance that in the event Toys R Us, world's greatest toy store, went bankrupt, that they would be held on they would be okay in terms of their invoices. So when we look at the importance of insurance, if you form a corporation, or even if you're just a sole proprietor, You need to have insurance because we live in a very litigious world. Unfortunately, it's as part of doing business. You need to make sure you find a broker, you make sure you have the right insurance coverage, quote it out, go out and go check a lot of different policies and make sure that you have the right type of insurance basically for your business. Now, the other thing I want to say too is incorporating can actually be very, very quick. It doesn't take a very long time. And I'm going to talk about some exceptions momentarily, but just make sure you're ready to take it on. Like I've seen friends of mine incorporate and you don't really realize it's like, okay, every year I have to go through and file, basically if we just looked at the requirements in terms of, so you're going to basically become a corporation, right? But in every single year, I'm going to have to file tax returns, federal and state. I'm also going to have to file a statement of information with the Secretary of State. I'm also going to have to pay the minimum corporation franchise tax, right? California, I believe it's like $800. Delaware has its own one. I've had to file statements of information, the federal and state returns, state and local government returns. For example, if I have a business license, there's a lot of different stuff that kind of goes on. So when you become a corporation, there's a lot of responsibility in terms of filing. So just make sure that you have a business and you're ready to go forward and do it. You don't want to wait to incorporate. Oh, that's good. But if you're just around with a group of friends and say, yeah, well, we want to incorporate Big Bennett's deep fried turkeys. Sounds like a winner. Sounds like a great business, but dude, no, we're not doing that, right? So just make sure you really kind of think it through, have a business plan. How are you going to get financed? How do I have a cash flow? Is this going to be a viable business? I'm assuming you've already kind of done those things, but don't just incorporate for the sake of incorporating. So insurance, again, very important. Now, where to incorporate? So for this question, again, this is my opinion. You're going to generally, if you're operating in California, you have to essentially be a California, corporation. And if I went and go through, so this is SOS, right? Actually, probably need to be setting out a SOS, sos.ca.gov. This is essentially coming over here. And if we go over here and we look at more about business entities, and I'm going to do a business search. And I want to go over here and look at business entities. Okay, hold on. I clicked something incorrect. Okay, account access guide. No. Wow, it used to be a lot easier to go to search businesses. Reserve request, free business search and copies. There we go. Winner, winner. Now, because we're a corporation, we're basically going to have to go through and so you've got Meta Platforms Inc. This is formerly known as basically this is formerly known as Facebook. And if we look at this over here, basically for Meta Platforms, you'll see this over here that basically their status is active. And this is the important part, formed in Delaware. What does this mean? Well, Meta Platforms is doing business in California at One Meta Way in Menlo Park, California. That's where they're doing business. So they need to be registered as a corporation in California. However, they are choosing to be domesticated in Delaware. What does that mean? It means anything related to corporate law is going to basically happen in Delaware, right? So anything related to corporate law matters is going to be in Delaware. Why do companies incorporate in Delaware, right? Why do they, if we go to Meta's filings at sec.gov, and right over here, the state of jurisdiction of incorporation or organization, it's Delaware. Why Delaware? Well, Delaware, for all intents and purposes, has probably the most corporate friendly laws around. Okay. Now, just to be very clear about this, we're talking about matters where Delaware comes into play is that if there is a shareholder suit against Meta Platforms, Delaware law is going to apply. If a Meta Platforms employee slips and falls at one Meta way, I hope that doesn't happen, but if it happened, they would sue Meta Platforms in California. If an employee, a California employee of Meta Platforms is terminated, you know, unlawfully, basically that employee would more than likely sue them in California. They would not sue them in Delaware. So Delaware is really where it's going to apply for corporate law matters. Now, this is very important. If I'm starting up if I'm basically starting up my business here in California, just me, myself, and I, do I want to be in Delaware? The answer is going to be no. I'm fine to be in California. However, once I take on financing, I'm going to raise money through a financing. I'm going to sell stock. I'm going to bring on investors. At that point in time, being in Delaware makes a lot more sense. Why is that? Comparing California to Delaware. Well, it's because California has laws in place that protect what we call minority shareholders. A minority shareholder is somebody who owns less than 50%. So by reincorporating in Delaware, it brings a lot of advantages to the corporation. So initially, and if we went back here, and if we looked back in time, basically over here, if I went and looked at the history, and if I look at their initial filing over here, let's have some fun. So statement of designation. So the Facebook, right over here, they're in Los Altos, and this is Sean Parker, president. Good stuff. And this is back in 2004, right? So basically, we'll do business in California as Delaware Facebook. So the Facebook has always basically been a foreign corporation in California. But this is something that actually becomes like really, it's very, very important, right? So right over here, is the Facebook Inc. is duly incorporated under the laws of the state of Delaware. By the way, you really should watch The Social Network. Great film. So this is really when we're going through over here, why do companies start in Delaware? Because if you're going to be raising a significant amount of money or financing, you're better off to be in Delaware. Delaware corporate law is crystal clear. It has been around since the late 1700s, I think, but it is crystal clear. I usually will give the example that if you asked a securities attorney how a corporate matter law would be resolved in Delaware, you're probably going to get like one answer, or maybe like one and a half with like a little bit of legal room. You go ask the same question in California. Well, how many opinions do you want to pay for? I can give you 5, I can give you 10, I can give you 100. It's so kind of extreme. But California corporate law is so challenging for so many different reasons that if you are going to be raising money, right, through debt, through equity, that at that point in time, I would go through and reincorporate in Delaware. By the way, you go see an attorney who has experience with this, say, hey, I'm a California corporation. You reincorporate in Delaware, you refile in California, you're now a foreign corporation in California. What does foreign corporation means? It means that basically you're domesticated in Delaware, and that's where all corporate law matters apply. You are foreign in California, meaning that if there are any corporate type of matters going on, they're basically going to happen. They will be handled by Delaware corporate law. Any type of breach of contract, basically going to be decided by the law on the contract, employment, slip and fall, all that would be in California. Okay, so looking at our next topic right over here, who can assist me? Not myself. I do not carry malpractice insurance. I'm the accounting professor, right? I am here to provide you the best education I possibly can. I hope you take a class with me at some point in time at Irvine Valley College, amazing college. But if you're going to just be one person, or maybe husband and wife, or husband and partner, or whatever your partnership status is, great. You're going to be on, you could probably use LegalZoom or some other kind of online part, because if you're just incorporating, you don't really need anything spectacular if it's just going to basically be husband and wife. Now, if my wife, if we something happened, God forbid, nothing does, but she would get everything, right? So it's cool. Why, honey, it's all yours. Now, where it gets challenging with incorporation is that, and I'll talk about this in a later video, but the way that if we look at this over here, one of the advantages of incorporating, and if we look at like this part right over here, like this Class A common stock, Mark Zuckerberg owns what is known as Class B. You look at this par value. This is 0.000006 par value per share. When I form a corporation, I can issue shares to me for literally nothing, like the par value of the stock. And we'll talk about that on a subsequent video. But because I'm issuing those shares, so say if I go into business with my friend Daniel, we form a corporation, and Daniel and I each get 100,000 shares. Well, we can issue those shares to ourselves at 0.0006. We write a check to the corporation, and now we each own 100,000 shares. And you do that a lot of the times for tax advantages. And you'll sometimes hear Congress saying, oh, well, Mark Zuckerberg has all this wealth, or Jeff Bezos has all this wealth, in that their share base value is so low, because when you formed a corporation, the corporation had no value, but this thing is, thousandfold today, and we should tax them on that. And that's problematic because, well, they can't really sell the shares, or when they do sell the shares, that's when you tax them, but you just can't, it's hard to find a way to tax people on something they haven't disposed of yet, or basically the value they've created. So when you're going through and kind of looking at this, because Daniel and I each have 100,000 shares at this low value, and say we start up a business, we're going to make an app for accounting applications. And if on day 2, I say to Daniel, dude, I'm going to leave. The thing that if I leave after having received all these shares, the problem comes in is like, well, what mechanism will Daniel have to get those shares back from me? And that would basically be the buy-sell agreement, or the business buyout agreement, where I can put in provisions that, oh, Bennett, I'm giving you these shares, but you're going to have to work for them over time. So again, this is going to be something you're going to want to go through and talk about with your partner. But this is why, if you're starting up a business with, and again, go watch The Social Network and you can see, a great example of why you always hire an attorney. By the way, when I say hire an attorney, why do I hire an attorney? Well, I want to hire an attorney, and I want to hire them because it's like an insurance policy. If I go to a law firm, they have to have malpractice insurance. And if they go through and give me bad advice or they give me a bad document, I'm going to be able to turn around and sue them. If I pull something off of the internet, or if I'm like listening to me because, I'm just giving you information, right? That's where the problem comes in. You want to pay for certain things, and this is something you want to pay for. If you wait to pay or you decide to go cheap, you're going to find out what happens, and it gets way more expensive in legal bills. Getting this set up initially is a lot cheaper than getting it set up later. So I would really, really encourage you to use an outside attorney for these kinds of things. Now, I kind of jumped ahead of this, but why not? Why should I be using you'll see a lot of times that certain accountants will say to people, oh, you're a sole proprietorship. Why don't you just be an LLC? Well, the reason that is that if you're an LLC, if you're a single member LLC, and let's just ask this question. Right. So basically, the owner reports small business income and expenses on Schedule C unless you filed Form 8832. Now, what you're going to see a lot of times is that an accountant will kind of go through and say, and I've seen this happen before, which is why I'm mentioning it, is that, oh, just, be an LLC. And generally, I only recommend for LLCs is that if you are actively, if you're, sorry, not actively, but if you're using, like, if you have an apartment complex and you want to, you want to hold it, I would hold it in an LLC. Part of the reason is that there is a assumption that it's generally going to be a passive activity. If you're running an active business, I would be going through and essentially choosing to be a corporation. The reason why is, and you'll hear this talk about this later on, is something called an exit plan or like an exit strategy. When you have a corporation, at some point in time, you're probably going to want to go through and sell it. Corporations are generally easier to sell than LLCs. And again, an opinion, what I've heard from people. And that's something that you just want to think about as you're moving forward. If you have an active business, if you're a retailer, I would probably be a corporation versus an LLC. Now, the other thing about corporation, this is why it's so important to talk to your tax advisor. You pay for a CPA for a variety of reasons, but you want to talk to a CPA. Should I choose to be a C corporation, where the corporation holds all the profit, gets taxed on that profit, gives out dividend, basically makes distributions? Or should I choose to be an S corporation, which disregards the corporate entity still has to file a return, but then all of the income passes down to the individual, right, on a Form K-1? Again, saying a lot of terms, probably not going to make a lot of sense for right now, but this is something you want to go through and talk to your tax advisor about. So, last kind of thing, I just wanted to make sure that I kind of talked about. Yeah, this is pretty much where we're going to go through and start. Thank you for watching. Please like and subscribe to the channel. It always helps. If you're looking for any kind of future videos on this or any other kind of accounting topics, feel free to send a message to 1812cpa@gmail.com. Have a great day, and I look forward to seeing you on future videos. Have a good one.